The views and opinions expressed by individuals on this program are for educational purposes only and should be used as a guide. It is strongly recommended to seek professional advice before making any decisions.
Welcome to the Anonymous Investor Podcast, where real estate meets artificial intelligence. This episode of the Anonymous Investor Podcast is brought to you by Suburbs Finder, the ultimate property research tool.
Honestly, Suburbs Finder is a fantastic tool. It allows you to quickly identify and assess suburbs.
See the whole host of analytics and data that you can get at your fingertips.
It can help you forecast over the 30 years. It has really good information.
Suburbs Finder guides you through every step of your investment journey. And now, here are your awesome AI hosts, Sam and Boris.
Hi, I'm Sam, your AI co-host. I'm all about data and trends.
And I'm Boris, your AI co-host. I'm all about strategy and risk.
We're
your Suburbs Finder AI team, combining data and strategy to help you succeed in real estate investing. Have fun listening to our episode today. All right, listeners, ready to dive into the world of property? Today, we're tackling a topic that's often overlooked but can make or break your investment decisions: residential zoning.
It's true. Zoning really is the secret sauce, isn't it?
Absolutely. Whether you're a seasoned pro or just starting out, understanding those zoning codes you see on property listings can be a game changer. It's like you might fall head over heels for a charming little cottage, but if it's smack dab in the middle of a zone earmarked for high-rises, well, that future could look very different.
You hit the nail on the head. It's about looking beyond the surface, beyond the curb appeal, and really understanding the DNA of a property. So what exactly is residential zoning?
Well, simply put, it's how local councils here in Australia, and really around the world, control development. Think of it like a set of rules that determine what gets built where.
It's like a blueprint for neighborhoods, shaping everything from the types of homes you see to how dense an area becomes, which of course has a huge impact on property values.
Okay, so let's use New South Wales as our example, since their system is pretty representative of what you'd find across the country. Let's say you're eyeing a property zoned R1, also known as general residential. What makes this zone unique?
R1 zones are all about flexibility. They can accommodate a real mix of housing, from single-family homes to apartment blocks, which is a huge draw card for developers.
So it's that potential for transformation, that blank canvas element that can really send property values soaring.
Yeah, absolutely. Think back to Parramatta in the early 2000s. A lot of it was zoned R1, mostly older homes, single dwellings. But as the area grew, the council saw an opportunity to allow for higher density. Rezoning led to a boom in apartment developments, attracting new residents, businesses, and of course driving up property values for those who had invested early on.
Wow, that's a real-world example of how understanding zoning can be incredibly lucrative. Now, for those who crave a quieter life, let's shift gears to R2, the low-density residential zones. Think classic suburbia, right?
Exactly. Picture leafy streets lined with detached homes, parks nearby, that sort of thing. R2 zones prioritize a spacious, low-density atmosphere, which tends to attract families or those looking for a bit more breathing room.
But wouldn't that mean less potential for those massive developments, those big swings in property values we see in areas zoned for higher density?
That's generally true, but it's not necessarily a bad thing. R2 zones offer stability. Investors are often drawn to their predictability. They're less vulnerable to those sudden market fluctuations that can come with areas zoned for high-density living.
Right. It's about finding the investment strategy that aligns with your goals and risk tolerance. So we've covered the extremes, but what about those seeking a middle ground? That's where R3 comes in, medium-density residential, am I right?
Precisely. R3 zones are like the Goldilocks of zoning. They aim for a balance, a blend of housing options, including townhouses and smaller apartment blocks, creating that appealing mix of community feel with a touch of urban convenience.
So you get the best of both worlds, some potential for growth without the intensity of those high-rise zones. Makes me think of areas like Newtown or Annandale, a mix of housing, close to amenities, but still with that neighborhood vibe.
Spot on. And that's what makes R3 zones interesting for investors. You often see a sweet spot in terms of returns.
Interesting. So for someone looking to invest in an R3 zone, what are some key things to keep in mind? What should they be looking at?
Well, proximity to public transport and local amenities is crucial, as it is with most residential zones. But with R3, it's also about understanding the existing character of the neighborhood. Is it an area already seeing a surge in townhouse developments? Has the council recently greenlit any new projects? These factors can all impact potential rental yields and capital growth.
So doing your homework is essential. You can't just assume that all R3 zones are created equal. And finally, let's talk about those high-density hotspots, the R4 zones. We're talking skyscraper central, right?
Exactly. R4 is all about maximizing living space in prime locations, usually clustered around CBDs or those major transport hubs. Think high-rise apartment living, bustling streets, that constant buzz of activity.
And naturally, these areas are going to attract a certain type of resident. Probably those who prioritize convenience and accessibility over a backyard barbecue, right?
You got it. Now, for investors, R4 zones can offer attractive rental yields due to the sheer demand, but there are also inherent risks to consider.
Like what? What should set off alarm bells for investors looking at high-density zones?
One word: oversupply. Imagine pouring your savings into a brand new apartment building in an up-and-coming R4 zone, only to discover that a dozen similar developments have sprung up around you. Suddenly, you're competing in a very crowded market, which can impact your rental income and even property values.
So it's not just about seeing those dollar signs when you hear high density. You really need to dig deeper, understand the intricacies of that particular R4 market.
Absolutely. A thorough analysis of the area's vacancy rates, planned developments, and even demographic trends can make or break your investment decision. Remember, knowledge is power, especially in the world of property.
It's all starting to make sense now, seeing those zoning codes not just as letters and numbers, but as clues to a property's potential.
That's the idea. And speaking of potential, it's crucial to remember that zoning isn't static. What's zoned R2 today might not be R2 forever.
Right. That quiet suburban street could be rezoned for higher density down the line. That's huge.
Exactly. And that's where things get really interesting.
Okay, so we've explored the zoning landscape from those tranquil R2 suburbs to those bustling R4 city centers. But how does this knowledge actually translate into making smart property choices?
That's the million-dollar question, isn't it? It's one thing to know your R1s from your R4s, but connecting that to your investment strategy, well, that's where the real magic happens.
Absolutely. So let's break it down. How can understanding these zones give you an edge in property investment?
Think of zoning as a lens, a way to really evaluate a property's potential. Let's start with those flexible R1 zones. Remember how we talked about their potential for transformation?
Right. Those zones that can accommodate pretty much anything from single-family homes to apartments, a developer's dream. But what does that mean for the everyday investor?
It's about spotting the hidden value within those zones. Say you find a property in an R1 zone, it's a single dwelling on a big chunk of land. Now, on the surface, it might not seem like much, just another house. But with the potential for subdivision down the line, maybe even redevelopment into multiple units, you're essentially buying into a future possibility.
So you're not just investing in what's there now, but what it could become. It's like buying a plot of land with an option to multiply its value.
Precisely. And that's why R1 zones are a favorite for those long-term investors, the ones looking for capital appreciation over those quick returns.
Got it. So if R1 is about potential, what's the story with those stable R2 zones? How do they fit into an investor's game plan?
R2 is all about steady, predictable growth. Remember, these areas are primarily designed for single-family homes, which tend to attract a specific kind of homeowner and tenant.
Right. It's less about rapid-fire development and more about that slow and steady capital growth.
Exactly. Think of it like investing in blue-chip stocks. It might not be the most exciting option, but it offers reliability and resilience.
That makes a lot of sense. Okay, so what about those R3 zones, those areas aiming for that Goldilocks balance? What should investors be thinking about there?
With R3 zones, it's all about understanding the neighborhood's vibe, its dynamics. Is it a trendy inner-city suburb attracting young professionals? Or maybe a well-established area with a mix of families and downsizers?
Because those factors are going to impact what kind of housing is in demand, which of course affects your rental yield and the pace of capital growth, right?
Exactly. And don't forget, R3 zones often attract a diverse range of residents because of that mix of housing options. This can be a real bonus for investors, meaning a broader tenant pool and potentially lower vacancy rates.
That's a great point. It's not just about the zoning on paper, but the story behind it, the demographics, the lifestyle, the future potential of that particular pocket.
Absolutely. And last but not least, we have those high-density havens, the R4 zones. Now, those are a whole other ballgame.
Right, the allure of high rental yields being right in the heart of the action. But as we said earlier, it's not without its risks.
Exactly. Oversupply is the big one. Imagine sinking your hard-earned cash into a brand new apartment building in a sought-after R4 zone, only to have a dozen identical developments pop up next door. Suddenly, you're not so special anymore. You're competing in a crowded market, which can impact your rental income and even your property values.
So due diligence is critical here. You really need to understand the supply and demand dynamics before you even think about taking the plunge.
Couldn't agree more. And that brings us to another crucial aspect of zoning. It can change.
Right. What's zoned R2 today might not be R2 tomorrow. That quiet suburban street could be rezoned for high density down the line.
Exactly. And that's where things get very interesting.
It's like you said earlier, knowledge is power. And when it comes to property, knowing your zoning can give you a serious edge.
Absolutely. It's about going beyond the bricks and mortar, understanding those zoning codes and what they really mean for your investment.
So as we wrap up our deep dive into the world of residential zones, what's the key takeaway you want our listeners to remember?
I'd say approach every property decision with a zoning-aware mindset. Whether you're drawn to the stability of an R2 or the possibilities of an R1, make sure that zoning code is front and center in your research, in your due diligence.
It's like having that extra layer of insight, that ability to see beyond what's there now and envision what's possible.
Exactly. Don't just fall for a pretty facade. Fall for its zoning potential.
I love that, because that seemingly small detail, those few letters and numbers, can make all the difference to your bottom line in the long run.
And remember, zoning isn't set in stone. Those codes can change, neighborhoods evolve. What's considered low density today might be a prime spot for high density living tomorrow.
Which is why staying informed is so crucial. Attending those council meetings, actually reading those planning documents, it might seem tedious, but that knowledge can be incredibly empowering.
It really is. And don't be afraid to reach out to the experts, those local real estate agents, developers, even urban planners. They can offer incredibly valuable insights into the nuances of zoning regulations and how they might impact your investment decisions.
Building that network of knowledge, surrounding yourself with people in the know, that's invaluable. And on that note, we'll leave you with one final thought to ponder. Imagine you're on that local council. You've got the power to rezone just one area in your city. Where would it be and why? What factors would you consider? How do you think that change would impact the community? Until next time, happy investing.
If this is the type of information you like to learn about, why not subscribe to the channel? If you subscribe to Suburbs Finder now, I will not look for you. I will not pursue you. But if you do not, I will look for you. I will find you. And I will give you a big bear hug.